Learning how to start a rental property business with no money gives you the ability to start creating positive cash flow every single month, even if you look at your bank account and there's no money there. When I first started my rental property business, I didn't have any money. I had to start bootstrapping it just like all of us did. A lot of us investors get around and talk sometimes and we're like, do you remember when we first started our rental property business? Because we all started off with no capital. So it doesn't matter your age or when you're starting. If you're starting with no capital, you started where most of us start. So again, don't be discouraged because you have no money. It's time to just figure out all the strategies you can use with no money to start landing rental properties and creating positive cash flow. Let's get at it. The very first thing you can do is partner. One of the things people don't understand when they get into the real estate business is how much partnerships drive deals. Partnerships are really one of the lifeblood of real estate deals. In fact, if you drive by a pretty large apartment building, I can nearly guarantee you that is owned by multiple people because partners can get a lot more deals done faster and really earn more revenue. And it takes so much more time to earn the kind of revenue to invest in properties on your own. So partnering with other people is one of the fastest ways to get to the finish line with a rental property business if you don't have any capital. And what you could do, you could be the person that finds the deal. So if you become really good at deal hunting and you can find deals and bring them to people who have money, you can partner on those deals, both take a piece of the equity, and guess what? You have a rental property business and you don't have any money in those deals. So you don't have to start with capital. This is why learning how to build a rental property business with no money is huge, because you don't have to have the capital to still leverage the amazing real estate game. Because a lot of people see real estate investors, they earn a lot of money and they say, I really want to start investing in real estate. But is that really for me? Because I don't have any money to do that. Because you know it takes money to make money. It's a terrible statement because no, it doesn't. It takes understanding, it takes mindset, it takes strategy, but it doesn't take money. You can own a lot of real estate without any money. In 2020, we bought $15 million in real estate. We didn't put one single dollar into the deal. My wife and I have zero money into those deals. Guess what? All those rental properties, I get paid because I found those deals and put the deal together. You can do the exact same thing. Partnerships drive real estate deals. And if you don't have money, those are simply the partners you need to find. The second thing you can do is rent out properties and Airbnb those properties after you rent them. You said, what do you mean? Do you know you can actually rent properties and then Airbnb them or put them on VRBO or any of the vacation rental sites, and you can make money on properties you don't even own? So you can start the passive income when you don't own the property. So let's say you don't have capital. Go rent an apartment just like you would, and then Airbnb that apartment and make money every single month. People that use this strategy make anywhere from $500 to as much as $2,500 on each unit they own like that. And guess what? As you continue to make more money, you can take up more and more properties in an area and continue to Airbnb those properties. It's a powerful way to leverage property that you don't even own, meaning capital you don't get, and you can start earning passive revenue with real estate. Now you have to understand in that model, you don't get to share in the upside, meaning as that property increases in value, you don't get to leverage that, the owner will leverage that. But it allows you to get into the real estate game and generate positive cash flow, not owning any real estate. They call this rental arbitrage. Rental arbitrage is when you rent something and you either sublease it or Airbnb it to people for more than you're renting it for, creating a delta or an income or profit from that difference. Meaning you're renting it for $1,000, you Airbnb it for $2,000. You create $1,000 of profit and you get to keep that $1,000 and earn revenue. That's the power of this specific strategy. Yet again, another strategy to bust into the real estate game, bust into the rental property game without having any capital. But I thought you need to have money to make money. It's time to throw that out. The third thing you can do is something called house hacking. You can get a property where you live in one of the units and rent the other unit out, and you can live there for free. The power of this, as long as you have the credit score to get the loan, you can get a very low interest loan, house hack that property, and guess what? You're in the rental game without having a lot of capital. You can get a loan as low as 3.5% down, and you can get into a property, rent the other side out, and completely wipe out your mortgage or your rent payment. Guess what? That leaves extra money every single month where you can save up and start investing in real estate. Or you could start locking down rental properties and start Airbnb-ing them like we just talked about. So house hacking is a great way to bust into the real estate game without having any capital in your bank. There's a lot of ways to do this. Start picking one and doing it today. My wife and I house hacked many times throughout our life because it's such a great way to save on expenses and also be investing at the same time. It's one of the few times where you can save and invest in the same transaction. And that's why it's so powerful. Before we go on to the next 2 tips, make sure you subscribe to our channel so you get all the content we put out about rental property, investing, building your wealth, and continuing to grow your financial future. Let's get back to the content. The next way to bust into the rental game with no money is through seller financing. Now, seller financing, it's one of my favorites, because it allows you to get properties and not leverage banks. Because a lot of times when you don't have a lot of capital, getting a loan is tough to do. Well, you can get zero down seller financing deals all the time. Now, when I say all the time, it doesn't mean that everybody's willing to do this with you, but there are people out there right now that would do a seller financing deal with you if you just simply knew how to find them, how to negotiate it, and really how to get the deal done. There's a couple things you want to look for in a seller financing deal. Most of the time, people that have owned the property more than 30 years or are in their mid-60s are prime seller financing candidates. Because if they're in their mid-60s, they're probably done managing the property, they don't really want it anymore, they're interested in a seller financing deal because they can get cash flow for life and they're not gonna get hit by taxes. And the reason owning the property nearly 30 years is another metric is because when you own the property that long, you've usually experienced all the depreciation, meaning you're going to pay an even higher tax bracket. If somebody sells a property, they're gonna be in the 30 to 42% range when they pay taxes on that property. And the longer they own that property, the higher up in that tax bracket they go. So they're gonna pay more taxes the more and longer they own it. So when you come to somebody who's in their mid-60s, have owned the property for a long time, it really would be a great benefit to them to sell it to you seller financing, charge you 6 or 7% interest, and not pay all that tax up front. Because often the interest they charge you can pay for their taxes. That's the power of this deal for them, and that's the main benefit and motive for them to actually do this deal. The other thing you want to think about when you're doing seller financing is make sure you understand the terms that are to be negotiated. When you're thinking about the terms, you're thinking about, number one, you're thinking about the down payment. How much are they going to require down in order to get this deal done? The other thing you're thinking about is interest rate. What type of interest are they going to require in order to make this deal worth it to them? The third is the amortization. How long, if you made every payment, would it take to pay the payment off? Most of the time, it's in the 15 to 30 year range, depending on the person and how fast they want that payment done. The fourth is the actual sale price. How much are you actually buying the property for? And then the fifth is a balloon option, meaning if they amortize the property at 30 years, but they want it paid off in 5, it's considered a 5-year balloon, meaning at 5 years it needs to be paid off. The reason a lot of owners do that is it gives you a low enough payment to make the property worth it, and then you can force appreciate that property, it's worth more money, and then you can get a traditional loan in 5 years. But again, a balloon payment means you're gonna pay as long as it's amortized. It's amortized for 30 years, you're gonna make payments as though you're gonna pay it off in 30 years, but when 5 years hit, you need to pay off the remainder of the loan. The fifth way you can bust into the rental property market without having any capital is through what's called subject to properties. Subject to properties is where you take over somebody's mortgage and then you rent the property out for more than their mortgage payment. So a subject to is, let's say somebody gets in a lot of trouble and they're in a foreclosure situation, meaning they're not making their payments and they're headed towards foreclosure with the bank. You can negotiate where you take over their mortgage, they move out of their house, you make their mortgage payments, you bring in a tenant and rent it out for more than their mortgage payment, and you've created profit and you don't have any money into the deal. Let me tell you right now, when I'm filming this, we're on the heels of the COVID-19 pandemic and the foreclosure moratorium will soon lift, and this is gonna be a huge strategy for investors to understand, because understanding this strategy will allow you to help hundreds of homeowners not go into foreclosure and get their credit obliterated by coming in, taking over those loans and being able to keep them afloat. It's a great value add to the person in that situation, and it's a great value add to you. But I also wanna give you a free training today. Make sure you click the link below and you're gonna be taken to our free 60-minute multifamily masterclass. It's a masterclass where I teach how to bust into the multifamily market and actually create revenue. I give you the 5 things you need to start buying multifamily real estate today. So click that link, go to the training, and I'll see you there.